Welcome back to this special edition of Inside Story, coming to you from the Qatari capital, Doha. In this half of the show, we're going to look at the issue of investment, both foreign investment here in the Gulf and the increasing level of Gulf investment in the rest of the world. Still with us, our guests, Dr. Ibrahim Owais, Mahmoud Al-Khaledi and Shashank Srivastav. Gentlemen, thanks for staying with us. Investment, it is key to this part of the world. This is your area of expertise, I would suggest, Shashank. It is foreign investment coming in here. What is that level of demand really like? How big is the level of interest in coming to the Gulf?
I would say extremely high. That's what we have seen from across not only the region but across the world. We see a deep interest and a long-term interest this time around of investing into the region. I mean, Qatar is a good example of that. I mean, this is a very real assets based economy. It's obviously driven by the oil and gas, the energy economy, and this is an economy which, if you monetize the proven gas reserves, they come out to be around $20 trillion.
Dr. Ibrahim, I want to play devil's advocate here and throw a few spanners in the works here. First of all, the geopolitical situation in the Gulf. Shashank has just told us all about how strong the economy is here and how strong the fundamentals are here. But this is a volatile part of the world. Recently you had terror warnings increased in the United Arab Emirates. You've got Iran just across the water, and we know the feeling towards Iran at the moment. Is that going to be a problem to make this a sustainable part of the world as far as business goes?
Of course, this is part of the negative aspects that would not attract foreign investment. It would be the security of the region and the possible threats coming from different directions. Furthermore, the heightened tension between Washington and Iran itself has a negative impact. And hence, I would disagree with you about the sustainability for the future because of the political factors and also because of the fact that the rate of inflation is very high in this particular region. So economically speaking, it's not an encouraging sign.
Let's turn it around now and look at the idea of not so much money being invested here, but Gulf money going overseas, because it makes big headlines these days. There was a football club, Manchester City, just bought out not long ago. There have been other companies, P&O, the shipping company, of course, bought out by Dubai World. It shows how strong the money is here. Are we going to see more and more of that, quite simply?
I think the capital outflows from the region to Europe and the US will be more and more selective. It will be more in the private equity side, and some of it will be in the large cap listed stocks with cheaper valuation, but the emphasis now should be on viable business model. So cheaper is not enough, as we have seen in the recent US investment banks, because some of the regional sovereign wealth funds invested in those banks earlier this year, and they suffered losses. And I think going forward, utilizing those funds in time of global financial stress would stabilize market, as long as they don't continue questioning the non-economic motivation behind those funds. This is the dilemma going on between the West and here.
Do you agree with that, Shashank? Is there a dilemma going on?
Well, what I would say is, I mean, this region will continue to be a net exporter of capital in the foreseeable future. Also, interestingly, this region is also a net exporter of risk in the world. And there needs to be a nice, interesting equilibrium that can be struck here. The second point is, of course, that capital doesn't know geographical boundaries. It goes where it can find the best return. Of course, for the appropriate amount of risk with that.
The best and secure.
The best and secure, exactly. The risk is and the reward. And I agree with what my fellow panelist is saying here. Is it's going to become more selective. It's going to look wider. If you look at the traditional spend or export of the capital from this region, it has been to the Western markets. a substantial share of that, I would say. But that will change, and I believe the region will increasingly start to look east, north, as well as south.
And do you think all those foreign markets will, for lack of a better word, will cope with that? I mean, when you see the power base starting to shift like this, US obviously in decline, more money coming out of this part of the world, seeing as we're talking about this part of the world, many parts, but this part, will markets be happy with that, to know that so many of their institutions are going into foreign hands in this manner?
Well, the markets will adjust to face the reality of the situation. It's as simple as that. It is free markets out there, and like I said, it's driven by where the capital can find adequate return for the requisite risk. So if it's in the east, that's where it is. It's as simple as that.
One final issue I want to deal with, and I probably should have picked up on this a little earlier when we were talking about investment here, and that's the issue of demand. The skyline behind you, gentlemen, has just changed incredibly over the last few years. It keeps growing. There are buildings going up everywhere. There are residential buildings going up everywhere here. One by one, let me start with you, Dr. Ibrahim. Is the demand really here? Again, I'm going to come back to that idea of sustainability. Is the demand really here to turn this into an economic powerhouse?
I don't think so. And it's a bubble that is likely to burst one day.
We're running out of time quickly. Demand.
Traditionally speaking, real estate has been a conventional asset class here in the region. In Qatar and Abu Dhabi, we are still in a favorable real estate cycle versus Dubai, we are in downside cycle. Demand is still outpacing supply. Till 2011, 2012. So there is demand, favorable demographics here in the region. And I think it's going to be sustainable for the next 2-3 years. But we need to differentiate between different markets.
And finally?
On the real estate side, yes, we're sitting on a bit of an asset inflation on the real estate side. But that's not the only story. The economy is made up of more than just real estate across the region. And I continue to see good demand in the other sectors of the economy apart from the real estate.
So watch this space, I think is what we'd say at the end of the show. Gentlemen, my thanks to all of you for your time here.
Thank you.
And many thanks to you, our viewer, for joining us here on this edition of Inside Story. You can send your comments to us, as always, insidestory@aljazeera.net. From the whole team, goodbye for now.